Let's look at Euro USD on weekly time frame. So the key structures we have here is we have structure here, we have structure here, Market open on a gap. We have a gap here. These are all supply roof. So we have a structure now on 1 hour. Supply roof, break of structure, retest and break of demand floor, retest of the supply roof, another retest. So GU now have a roof and a floor, temporary, while the market is consolidating. So we expect a breakout either from the roof or from the bottom. So if price breaks out from the roof, that's fine. If it breaks out from the bottom, that's fine. So you can see the roof, you can see the bottom. So here will be temporary buy. Here is temporary buy. Price is building up by liquidity for take. And here is a sell. They are all liquidity build up. There's a nice liquidity build up at the bottom. Buy liquidity, buy liquidity, buy liquidity. Another one. So they're about another one. This is break of structure. This is retest. R. Buy liquidity 1, 2, 3, 4, 5. So what the market will likely do is now EU is gearing up for potential swing as we see DXY sit up. So price could technically go back and return here. So it takes all the buy and return them to this level. And It tallies with our ascending trend line, short-term ascending trend line. Our short-term ascending trend line, you're gonna see here, we have here as a support structure, support structure, support structure. So if price come down here, it will pick liquidity at this level, and EU will reset and continue its uptrend. For short term, EU remains bullish, but if Fed keeps rates constant and we don't see rate cuts, then EU could lose majority of its bullish momentum. It could lose them. It could lose them if that's the path the Federal Reserve want to adopt. Jerome Powell is under tension, and if he stands on his policies and make economic monetary policy changes based on data into in, then that could likely mean that we'll be watching more of US data prints and evaluate how the Federal Reserve will interpret the data prints in relative to interest rate decision. So rate cut, rate increment is based on data print report and evaluation. So it's not going to be based on sentiment. It'll be based on data to data according to Federal Reserve. So we are going to watch all economic data prints and put them together to make a right anticipation on an increment in interest rate or steady uh, interest rate decision. So as we continue to watch inflation unfold and see trade war escalation, we will also be watching data prints from the United States and put them together to know when the Federal Reserve will make their monetary policy decision that will either shape or destroy the dollar index. So this is what we'll have. Sorry, Euro USD.